guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be discussing why I am extremely concerned about the stock market right now. I will promise you up front that this video is not going to be a clickbait video. I'm going to be discussing my honest thoughts, opinions, and ideas where the stock market is likely to be headed in the future in my personal opinion. I'll also make a second promise and promise that I'll keep this video relatively short because I know I'm posting this on a Friday afternoon and people want to do things other than watch a RexFinance video on Friday afternoon. But for those of you guys that are here, thank you for coming out and watching this video. Before we begin with this, I want to say thank you to Philip and Swapna for recently subscribing to the YouTube channel. And I also want to thank Michael and Craig for recently signing up for the RexFinance membership. You can do that through YouTube memberships by hitting the join button down below located right next to the subscribe button. If you don't see that, the second way you can join the membership is by joining the newly founded Patreon, and you can find that link down below in a pinned comment. That membership gets you exclusive access to me, early access to new videos and buy and sellers, all that good stuff, so feel free to check it out. But anyways, without further ado, let's go ahead and get into this. So, to start things off here, what I'm going to be looking at today are forward PE ratios. If you guys missed my video that I posted a couple weeks ago, I basically did this exact same thing where we looked at forward PE ratios and broke them down into small cap, mid cap, and large cap. But since I posted that video, my findings have gotten even worse, and there's a reason I believe that a stock market crash is probably going to come. Now, I know when some of you hear me say that, you're going to freak out because RexFinance is a perma-bull. He's never bearish on the stock market. In fact, you'd have better odds of taking on all of hell with a squirt gun than finding RexFinance bearish on the stock market. Now, some of that is true. I even consider myself a perma-bull. If we look at the long term, we can see that the stock markets have always been in a bullish trend. However, inside of that bullish trend, we've had small bearish trends. I also want to say, please don't freak out when you hear me say I think a market crash is coming, because I think as a result of the market crash, a lot of the stocks that are covered on YouTube and likely the stocks you guys own in your portfolios are going to do very well. So let me explain to you why this is. So to start things off, let's look at the forward PE ratio of large cap companies. Large caps are characterized by having a greater than $10 billion market cap on that company. So the S&P 500 large caps right now, they have a forward PE sitting right around 21. In comparison to previous years, we have not seen large caps have this valuation since 2001, literally the tech bubble. Now I just drew that red line so you can see it better. This is scary. This is going to have to change at some point in time. Whenever large cap valuations get this high, something has to change. Now, that doesn't necessarily mean that stock prices have to go down, although most of the time that's what happens. For those of you that are unfamiliar with a forward PE ratio, the forward PE ratio can be calculated by taking the current share price and dividing it by the estimated future EPS, or earnings per share. This gives you a good idea of how much future growth is priced into stocks at a certain point in time. So when we go back to our chart and see that the forward PE ratio valuations haven't been this high since the tech bubble, since I was born, that should be some cause for concern. But the reason I say that share prices don't always have to come down for this valuation to get more in line is because the share price is only one factor of the calculation of the forward PE ratio. The second part of the forward PE ratio is the estimated earnings per share. So one way that this valuation can come down is if the forward earnings per shares, so the outlooks that these companies are putting out, they actually raise that guidance, they raise those projections. Now for the large cap stocks that are recovery plays, I think that could happen. I think those companies could actually raise their guidance, raise their projections as time goes on, which is going to help bring the forward PE valuation of large caps down back to traditional levels. It's also important to note that valuation for large caps could stay this high for a few years to come yet. Nobody really knows, but you can see that leading up to the tech bubble, valuations were this high for years and years, not weeks, not months, but years. Now this time I think it's a little bit different than the tech bubble, so I don't think necessarily that's going to happen, but it very well could. However, as we look forward, somehow these valuations are going to have to come down in a short amount of time or a long amount of time. Either way, large cap stocks are likely going to hurt. Best case scenario right now for these large cap stocks is that they flatline in share price for the next 3 to 4 years. That in itself would bring these valuations back down without hurting shareholders too much. I also need to note that the most recent data we have in this valuation metric is from June 25th. Ever since June 25th, we can see that large cap valuations have gone up even further. So looking at the S&P 500, since June 25th, we can see that we're up another 2% over the past couple weeks since we got that reading. So when we go back to this, it's likely that the average forward PE ratio is actually higher than the 21 reading that we got on June 25th. Now if we scroll down and look at the same valuation metric for mid caps, we can see that it's looking a little bit better. The deals right now are in mid caps, and we'll see later that actually most of the deals right now are in small cap companies. The mid caps and the small caps are what make up the bulk of a retail investor's portfolio currently. Mid caps are characterized as having market caps between $2 billion and $10 billion. Small caps are characterized as having market caps between $300 million and $2 billion. So if you go through your current portfolio, most, if not all of the stocks you own are going to fit into the small cap or mid cap criteria. And this is also part of the reason that your stock market portfolio likely hasn't recovered all the way yet. But we can see with mid caps that the current valuation metric of an 18 forward PE on average is more in line with what we've seen traditionally. We only have to go back to 2017, 2016 to see the same valuation on these mid-cap stocks. However, you can still see that these valuations are elevated somewhat, even despite being more in line with what we've seen traditionally. What this means is that not all mid-cap companies are tremendous deals right now, but you can certainly find a handful of tremendous deals amongst the mid-cap companies right now. But now let's scroll down even further and look at small caps. We can see that the valuation on small caps is around an 18 forward PE, just like mid caps. However, for small cap companies, which again are companies valued at $300 million to $2 billion, this valuation is largely in line with what we've seen historically. What this means is the bulk of the deals right now that you can find in the stock market are small caps. So you may be asking, Rex, you mentioned this market crash that you think is going to happen. And I do think it's going to happen because large caps, again, their valuations are ridiculous right now. We haven't seen these valuations since the tech bubble. Those have to come down eventually. But what I think is going to happen is as these large cap companies crash down, that money is going to cycle back into the small caps and mid caps that have been hurt over the first part of 2021. The reason I believe this is going to happen is because throughout 2021, we've kind of had a rotating punching bag of different asset classes and types of assets getting hit hard. First, it started out with small caps and mid cap companies being absolutely decimated, while the large caps prospered and gained in share price. Next came cryptocurrencies, which we're in the middle of right now. Bitcoin prices have dropped 50% from their all-time highs. So we've seen this rotating punching bag of the most popular asset classes out there taking a beating. Basically, the one asset class in the stock market that has yet to be the punching bag are these large cap companies. The reason this will equate to a market crash is because large cap companies make up the vast majority of the market indices. What that means is the largest companies that are publicly traded make up the bulk of the S&P 500, the Dow Jones Industrial Average, all of these different metrics we use to track the stock market. However, I believe that this is going to benefit small caps. The reason I believe this is true is because we've already seen some institutions start loading up big time back into small caps and mid caps, I think in anticipation of this happening, where all of this mutual fund, retirement fund, etc. money is going to come flowing back out of large caps and it's going to be looking for a place to go. Well, obviously money likes to find the best deals. Right now the best deals are in small caps and mid caps. Large caps right now, they're an absolute ripoff. Also, I honestly don't think small cap companies and mid cap companies can fall much more from where they're at. We've reached a point with a lot of these companies that the retail traders or the weak hands holding these stocks have already sold out. The remaining shareholders are ones that are holding tight onto those shares and they're waiting for the share price to go up. They're long-term investors. So I don't think you're gonna get many of these remaining people still holding these companies to sell out because obviously they have high conviction in these stocks they own. After these stocks have already dropped 50, 60%, they're still holding these shares, so they believe in that company and they're likely not going to sell out. So just as a reminder, large caps are characterized as having a $10 billion to a $200 billion market cap. Mid caps are $2 billion to $10 billion, and small caps are $300 million to $2 billion. What we looked at today is the fact that large cap valuations are the highest they've been since the tech bubble, and they're going to have to come down eventually, somehow, some way. I believe a lot of that money is going to flow back into the small caps and mid caps or growth stocks because money always looks for that highest return. Large cap companies are an absolute ripoff right now, and the deals you can find in the stock market are small cap and mid cap companies. As a result of all of this, I think a stock market crash is likely. However, what's going to crash are the indices and the large cap stocks. What's going to gain as the stock market crashes are these small caps and mid cap companies because, again, I don't think they can sell off any more than they already have. Valuations we looked at today are from June 25th. Since June 25th, large cap companies have continued on their trajectory of setting new all-time highs, which means the forward PE valuation metric on large caps is likely even higher than it is now because large cap companies are up another 2% over the past week since this data was put out. On the other hand, small caps in the Russell 2000, since this data has been put out, are down another 1.5%. So the valuation on small caps have fallen even more. So with that, I hope you really enjoyed this video. Let me know down in the comment section below whether you agree with me or disagree with me. I myself feel that large caps are going to have a lot of money flowing out of them and the indices are going to crash while the small caps and mid cap companies recover in share price. If you guys enjoyed this video, please hit that like button down below. It helps out my channel tremendously. Also, if you're new here or returning and not yet subscribed, feel free to hit that subscribe button down below. With that, I'll be back with a brand new video next week. Have a great weekend. Peace out.